Ladies and gentlemen, good day and welcome to the HLE Glascoat Limited Q4 and FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rasika Sawant from Orient Capital. Thank you, and over to you, ma'am.
Thank you, and welcome to the Q4 and FY23 earnings conference call of HLE Glascoat Limited. Today on this call, we have Mr. Himanshu Patel, Managing Director, along with senior management team. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of company's investor presentation, which has been uploaded on the stock exchange as well as company's website. With this, I hand over the call to Mr. Himanshu Patel for his opening remarks. Over to you, sir.
Good evening and warm welcome to all the participants. Thank you for joining us today to discuss HLE Glascoat's Q4 and financial year 23 financial performance. Today on the call, we have Mr. Alap Patel, Executive Director, Mr. Harsh Patel, Executive Director, Mr. Naveen Kandapal, CFO, and Mr. Nilesh Ganjwala, Senior Advisor to the company, and Orient Capital, our investor relations partner. I hope everyone has had an opportunity to go through our financial results and the investor presentation which has been uploaded on the stock exchanges as well as on the company's website. Today, I would like to discuss our company's performance in the light of these current global challenges. As we all know, the world has been grappling with overlapping crises. The geopolitical situation is worrying and the global economy has been stressed with the liquidity crunch in the global banking system and the recessionary predictions in developed economies. However, despite these uncertainties, the Indian economy has proven to be quite resilient. India also faces its own set of challenges, including the increase in interest rates and higher inflation. However, the overall Indian industry seems to be stable and progressing well. In this background, I am pleased to report that our company has performed very well. Our revenues from operations experienced a growth of approximately 42.8% and our EBITDA grew by 23.3%, reflecting our ability to navigate the challenging times effectively. We have been closely monitoring the evolving demand trends, and our robust order book indicates a promising future ahead. I am pleased to announce that our company has achieved significant growth in financial performance over the sequential quarter. The jump in revenue was due to higher production as well as increase in demand from end user industry. Currently, the company has an order book of approximately 4 to 5 months for the Indian business and approximately 9 months for the European business. Also, I would like to highlight that we have added several new customers in India as well as in Europe. During the first half of financial year 23, we witnessed unprecedented volatility in raw material prices, which adversely affected our business margins. However, we have witnessed stability in the prices of key raw materials in the recent months, and we continue to monitor this situation closely. By closely managing costs and focusing on operating efficiencies, we have maintained annual EBITDA margin at 15.6%. We are delighted to inform you that our strategic acquisition of Thales Tech Germany is yielding positive results. By working closely, we are progressively leveraging our synergies thereby enhancing our competitive edge and expanding our market reach. This acquisition has opened up new avenues for growth and innovation, positioning us as a strong player in the industry. We believe advantages of the combined operations will continue to accrue in the coming quarters. At our core, we are committed to meeting the evolving needs of our clients. Through a relentless efforts in innovation and research and development, we continuously strive to exceed customer expectations. By investing in proactive product development, we ensure that our solutions remain ahead of the curve. I now hand over the call to Mr. Naveen Kantapal, CFO, who will brief you on the financial highlights for the period. Thank you, and over to you, Naveen.
Thank you, sir, and a very good evening to all the participants. I will start with Q4 FY23 financial performance of the company. The consolidated total revenues for the quarter stood at rupees 301 crores versus rupees 251 crores in Q4 FY22. We have witnessed a growth of around 20% on a year-on-year basis. Our filtration, drying and other equipment contributed rupees 113 crores compared to rupees 103 crores, registering a growth of 9.3% on a year-on-year basis. Our glass-lined equipment contributed rupees 181 crores in Q4 FY23 against rupees 143 crores during the corresponding quarter last year, reporting a growth of 27%. The EBITDA stood at around rupees 47 crores, reflecting a growth of 19.4% year-on-year basis. Our consolidated EBITDA margin stood at 15.9% for Q4 FY23. PAT stood at rupees 22.80 crores. Now coming to sequential quarter-on-quarter performance, our revenue in Q4 FY23 grew by 39%. Our EBITDA in Q4 FY23 witnessed the growth of 57% quarter-on-quarter. EBITDA margins in Q4 FY23 stood at 5.9% as against 13.2% in Q3 FY23. Our PAT in Q4 FY23 reflects a growth of 86%. PAT margins in Q4 FY23 stood at 7.6% against 5.7% in Q3 FY23. Now moving to the yearly performance for FY23, the consolidated revenues for FY23 stood at rupees 931 crores versus rupees 652 crores in FY22, registering a growth of 42.8% on a year-on-year basis. Our filtration, drying and other equipment contributed approximately 37% of the revenue. At rupees 344 crores compared to 314 crores, posting a growth of 9.6% on a year-on-year basis. The glass-lined business continues to contribute strongly to the total revenue at rupees 578 crores in FY23 against rupees 330 crores during the last year, a growth of 75.3% on a year-on-year basis. This also includes the impact of the consolidation of the financials. The consolidated EBITDA for FY23 is 145 crores, a growth of 23.3% year-on-year. The company reported EBITDA margin of 15.6% against 18% of FY22. The consolidated PAT is rupees 70 crores, a growth of around 19.9% year-on-year. Now I would like to request the moderator to kindly open the floor for questions and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nakul Doshi from Windshine Financial Services. Please go ahead.
Hello, good afternoon. Am I audible?
Yes, sir. Please proceed.
Okay. Thank you for this opportunity. So my first question was about the volume numbers in terms of units for this year for both glass line units and filtration units. So could you provide some outlook about the volume numbers? That would be great.
For filtration and drying and glass line combined, we saw volume growth in the 10 to 15% range in terms of number of units.
Okay, and also in terms of capacity utilization, what are we expecting, including the units at Maroli, Anand, Silvassa, and the Thaletic plant?
So, as you may be aware, we have recently commissioned a greenfield expansion at Silvassa for filtration and drying equipment. In addition to that, we have also in the last financial year added substantial capacity in terms of shop floor area, also at our Maroli plant for filtration and drying unit. So while our capacity utilization was in excess of 85% in the previous financial year, given our current targets and order books, order book for the current year, we are somewhere in the 75 to 80% capacity utilization for F&D. And this is again after the expansion and in view of the increased order book. For Germany, I think we have ample capacity there. We have a very large plant measuring about 37,000 square meters. And in terms of capacity utilization, I believe that there is ample scope to dramatically increase the revenue there without making any substantial capital investment.
Okay, and this capacity utilization, the numbers which you gave right now, are for FY24, right?
Yes.
And okay. Yeah, that's it from my side.
Sure. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question, an individual investor, please go ahead.
And for this opportunity.
Mr. Shah, your audio is breaking up.
Yeah. Hello.
Yes, Mr. Shah, we are able to hear you, but your audio is breaking up.
Yeah, just a moment, please.
Yeah, sure.
Hello, am I audible now?
Yes, sir. Please proceed.
Yeah, thank you for this opportunity. So I just wanted, I had some questions regarding fund utilization. So can you just provide some details about our fund raise plan of 350 crores? So I think on the fundraise, we are looking at the right timing and market conditions to take a further call on this. So we are closely in touch with the investors, but the final call on the fundraise has not yet been taken. Okay, so any information on where will be?
Sorry to interrupt, Mr. Shah, your audio is breaking up. We are not able to hear you clearly.
Yeah. Hello.
Mr. Shah, may we request that you return to the question queue as we are not able to hear you clearly.
Yeah, okay.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rehan from Sycomoro. Please go ahead.
Hi, am I audible?
Yes, sir. Please proceed.
I had a few questions. So I'll start with Thalitech. Just wanted to get your perspective on what's going on at Thalitech, given that there was a fall in revenue and EBITDA year on year, if I look at it quarterly. And also within Thalitech, I think there seems to be another income of negative 6 crores. So if you can just shed some light on that.
So first of all, Thalitech has not seen a downturn. And on the contrary, Thalitech has actually been doing extremely well. And even Q4 is no different. Thalitech has shown better top-line revenue as well as bottom line in terms of EBITDA and PBT. So no, there is no fall in EBITDA. I think your question is probably driven by the negative 6.3 other income that you are calculating, which is actually a elimination of the dividend that Thalitech paid to the Indian company during the financial year. So when you look at consolidated minus standalone, you will have to adjust for the 6.3 crores, which was actually a dividend income in India, which has been eliminated in consolidation.
Sure, so that helps. Okay, apart from that, just wanted to understand what kind of capex is happening in Germany and in India going forward, and what is the expectation specifically for FY23?
Yeah, so we are expecting to do a maintenance sort of capex for both the Indian and the German plants at about 10 to 12 crores for either of the geographies. So about 10 to 12 crores of capex at the German plant, which is predominantly for upgradation and slight expansion in certain areas of the shop floor. Whereas for India, for all three plants put together, the capex will be more or less maintenance capex, and it will be around 12 crores all the plants put together. We also have recently procured a large parcel of land for expansion of the glassline equipment facility, but the investment plans for that expansion are still being drawn up. So we don't have firm numbers for that expansion as now.
Sure. So one last question.
Sorry, just to clarify, we are also currently in process of executing a center of excellence at the Anand plant. This capex was announced last year, and we will be finishing this capital investment, and we will mostly be commissioning the plant in Q3 of the current financial year.
Okay, thank you, sir. So one last question from my side. So in Q4, it seems that the margins in the glassline equipment, when I look at the standalone business, have come down compared to, say, the last few quarters. Again, correct me if I'm wrong. And it seems to be below the filtration and drying. So just wanted to understand what the outlook is there, and even going forward, how will it be?
So the margins in the business are fluctuating based on certain orders that we get, and there were certain large orders that were executed during this period on which margins were slightly lower. But over, let's say, the immediate term as well as the medium term, we believe the margins to go back to normal here.
Okay, so can you give a broad range of what that expectation would be?
I think we believe that the long-term maintainable margins in this business are in the 18% range. We always see some ups and downs. We've seen a high of 22-23% and a low of maybe up to 14-15% over the last 4 years. And we believe that we should be in and around a long-term average of about 18%.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking my question, sir. On the filtration and drying market, we've had about a 9% growth this year. In your assessment, how will that compare? What kind of volume growth does it represent, and how does it compare with the growth in the industry?
So the growth that is about 9.6% during the last financial year was the value growth that we saw. The growth is actually determined by two things that we've witnessed during the last financial year. First is the commissioning of the new plant at Silvassa. We had a smaller plant in Silvassa which was kind of discontinued, and then we had a transition to the new plant during the first and second quarter of FY23. As we had spoken about this earlier, there was obviously a slight disruption in the production, and it always takes about a quarter or two to ramp up production in an absolute greenfield project, and that's exactly been the experience during FY23. So one of the reasons for the relative lower growth is the Silvassa plant commissioning, transitioning, and ramp up. The second reason is also the entire product mix of the business is, as you may be aware, linked to two main materials. One is stainless steel, which is relatively lower priced, and other exotic metals, which include things like HLE and other alloys, which are at substantially higher values. During this financial year, the product mix that we see the value of the exotic metal equipments has somewhat dropped off. And again, this is something that is which fluctuates from year on year. And when that happens, you will see a relatively lower value growth, although the operating levels at the plants have been at good levels. So while we may have much higher volume increases, but at a value level, simply because we supplied more stainless steel vessels compared to HLE or other exotic metals, the value at the gross level, at the gross revenue level, is lower.
Okay. And yes, given the fact that there has been some slowdown in pharma, chemicals also, there are emerging signs of some challenges emerging. I mean, are you seeing any of that reflecting in your domestic order book across glass-lined and infiltration?
I think there has been a certain fluctuation during this financial year, which initially was more relatable to the volatility in the raw material prices, because until the volatility in the raw material prices stabilized, the customers were normally a little reluctant or hesitant to place fresh orders for their projects. So that's something that we noticed during the initial months of the year. In the current scenario, we are seeing a renewed interest in orders, and as you see, we have by rotation, we always see a rotation of industries. So sometimes APIs do form a chunk of the product. Sometimes it's agrochemicals, and right now, as we see, it appears to be specialty chemicals. So by rotation, we always see one industry or the other mitigating the other, maybe somewhat slower growth in the other one.
So from where you are, over the next couple of years, what kind of growth, value growth do you see in glass-lined and in the filtration equipment businesses segment?
We are very confident that we will continue to see CAGR in the 15 to 20% range for the foreseeable future. I think we are quite confident of that kind of growth.
In both the segments.
And this I'm talking on a consolidated basis, including Germany.
And so, one housekeeping, what was the revenue from Thalitech in this year?
The revenue of Thalitech included in this year is about 270 crores. The euro equivalent would be 33 million euros.
And lastly, if I can take in one, in terms of your plans to add more adjacencies, Any thoughts on what you will want to do incrementally? Are you looking to go beyond these two verticals, and what kind of verticals would you be looking at?
Yeah. So I think in terms of, so we have introduced a couple of new products, innovations, etc. And maybe, Himanshu bhai, if you can just, shine some light on the products that we have introduced in the current year.
Yes. We have added a few new products. One of them is a very prestigious kind of product solutions at Thalitech. It is we have added 7 new solutions in Germany. They also added stainless steel reactors at India at Silvassa, and pilot skids for pharma and chemical in various material of construction. We have added from Anand Works.
I think we also add that. I think we also added about 7 new innovations in the Germany business, which has also been pretty much for the first time in the world.
Thank you, sir.
Mr. Agarwal, are you done with your question?
Yeah, I'm done. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Pritesh from Lucky Investments. Please go ahead.
Yes, sir. You mentioned the capacity utilization in filtration and drying. If you could give the capacity utilization in glass-lined at this 578 crore business, what is the capacity utilization there?
Yeah. So the 578 crore business is spread across 2 jobs. So the European business, or rather the German plant, and our Indian facility. So Indian facility right now is at a relatively high capacity utilization. So we are over 85% capacity at the moment. The German plant, like I said earlier also, is a very large plant, and we have ample room there in terms of capacity available to ramp up production without making any dramatic investments in that plant.
Okay. And when you were mentioning the capex, you said that India operations will largely have maintenance capex. So will it take care of capacity addition in glass-lined in India?
Yeah, not really. So the maintenance capex was for the maintenance capex of 10 to 12 crores was spread across all 3 plants. So the 2 F&D plants in Maroli, Silvassa, and the glass-lined plant.
Yes.
In addition to that, we will also be expanding the glass-lined equipment facility, for which plans are still being drawn up. So we are currently not in a position to give you any guidance on the number for that capex.
So, based on the current asset that you have, you will be able to support your 15-20% growth?
In this year, yes.
Okay. And any changes in any changes that you see on the supply side, especially in the filtration and drying equipment suppliers? Any new suppliers or any old supplier who is emerging up the curve? Any changes you see on the competition side?
We have not seen any new suppliers coming up by and large. I think it's the same old suppliers who are on the horizon. So no, we haven't seen any major changes in the supply side scenario.
Okay. And my last question is, you were giving to one of the participants the new or the adjacent product line that you have added in some of the. I missed some of those 6 or 7 products. Can you just retell them, because the line was not clear? I could only hear added 7 new innovations in Thalitech, Germany.
So we did not enumerate the innovations. We only mentioned that there were 7 new innovations during the years. As you are aware, Thalitech takes always pride in being the innovation leader in the industry, and we've continued with that tradition in the current year as well.
Okay, sir. Thank you very much. All the best.
Thank you. The next question is from the line of Drasti Shah from Blue Lotus Capital Advisors LLP. Please go ahead.
Hello, am I audible? Hello.
Yes, ma'am. Please proceed.
Employee cost on Concall basis has more than doubled. So will this be sustainable, or we can see more increase in employee cost going forward?
So the employee cost has gone up predominantly because this is the first full year of consolidation of the German numbers into our numbers here. And as you may be aware, the employee cost as a percentage of revenue is substantially higher. The operations being located in Germany.
Okay. Also, regarding one of the development which had come across earlier, I just wanted to know what some updates on it, like regarding getting some approvals from Indian Register of Shipping or Lloyd Register Group for a supply of marine application pressure vessels. So, can you update on this development if it is going on? Hello.
Yeah. So after getting those certificates, we have already received a few orders on the same line, and we are also working on some other development which they have asked us, and probably will be also getting those orders for the same manufacturing, for same product manufacturing.
So how much revenue is generated from marine industry, and the kind of margins we get from marine application products?
Okay, so let me give you some background. This is actually something that has come up because of our capabilities and because of some indigenization that was mandatory for some defense industry equipment, Navy especially. So what has happened is this market was currently or is currently being 100% addressed by import or rather foreign players. The margins are relatively high, and the market expectation currently we are in the process of discovering the size of the market, but it is expected to be in the range of anywhere between 1,500 crore a year for this product, and the margins are relatively healthy.
So can we expect around 20-30% margins in the range of 25-30%? And what kind of order book we might have, like in 1,500 crore market size? How much order we might be getting?
So I think go ahead, please. Go ahead. Sorry. So we are the first qualified company in the country. There is no other company in India which has been qualified for this job. As I said, so far everything was being imported. So at the moment we have no Indian competition, and we don't see Navy currently qualifying anybody. The margins, I think, are this is something which is, I think, which is more than the current margins that we make on filtration drying, but I would not like to comment on the absolute number.
But how many product lines
Sorry to interrupt. Ms. Shah, we are unable to hear you.
Hello?
Yes, ma'am. Please repeat your question.
All I wanted to understand is how many kind of products do we have for this segment, and do we have the capacities for this industry, like marine industry?
So the product that we are talking about is a very, very specialized product that finds application for deep sea diving vessels. So it's just one family of products that we have ventured into. And, having had the certification from Indian Register of Shipping, so on and so forth, it does open up doors for a variety of jobs, but currently we are focusing only on this very specialized product because it's a fairly technically challenging product to make, and we believe that it has a potential to have higher margins than, your run-of-the-mill marine application.
All right. what kind of revenues we can expect like in next 3 or 4 years? Like, can this be a big part of the overall revenue contribution, or will be a small part like right now it is?
So just to give you an example, the first trial order that we executed was in the 5 crore range, revenue range. Now, we are now beginning to bid for orders which range in ticket size anywhere from 50 lakhs to 10 crores. So like Harsh had said a while ago, we are still in the process of discovering this market, and it's probably too early to give any guidance on the absolute numbers of revenue or margin.
All right. Thank you. That's it from my side. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Darshan Shah, an individual investor. Please go ahead.
Yes, hello. Am I audible now?
Yes, sir.
Okay.
Please proceed.
Yes, sir. So just to follow up on the previous question I could not ask. So about the fund utilization, you said you were looking at the market and the investors. So could I get, where would we deploy these 350 crores?
So at the current, the 350 crores is actually the upper cap for the fundraise. We may actually end up raising much lower depending on the actual fund requirement. And the likelihood of our raising a lower amount of funds is actually very likely now. In terms of the end use of the funds, it will be basically to look at opportunities which would include reducing the overall borrowings of the business on one side, as well as looking at inorganic opportunities on the other side. So this is the 2 areas that will determine the actual amount of funds that are likely to be raised.
Okay. Thank you, sir. My next question was on the it had launched to cater to the SME sector. So could you just give a brief idea of what percentage of revenue is it contributing currently?
Sorry, we could not hear the question. Could you please repeat it?
So we have developed a product to cater to the SME sector. So I just wanted to know the revenue contribution of that product.
So I think the revenue contribution during FY23 was in excess of between 55 and 60 crores.
Okay, sir. So are you in a position today to give some future guidance regarding the same, or how much more did you expect, or what is the total addressable market for that product only?
It's difficult to say. To be very honest, the way we market filtration and drying equipment is not only from a product perspective. You'll be actually quite happy to know that this product, which was originally intended and targeted at let's say the mid-sized companies, has actually found favor even with some of the larger companies who actually like this product simply from a perspective of it being available off the shelf. So there are multiple. It's very difficult to actually put a number on what kind of. But the good news is that the overall trends are very, very encouraging.
Okay, sir. And do we have any order book for that product currently? Like
order book is in excess of 75 to 100 machines as we speak.
Okay, sir. And I wanted to know about the Thalatic acquisition. From where are we in the timeline for the tech transfer and our integration, sir?
Yeah. As we had informed in some of the earlier calls, we have already received all of the regulatory consents for technology transfer. And currently we are in advanced stages of the technology transfer process where several visits from either of the teams have been made, and it is progressing really well.
Okay, sir. Thank you.
Sure.
Thank you. Ladies and gentlemen, in the interest of time, that was our last question. I now hand the conference over to Mr. Himanshu Patel for his closing comments.
So I thank the team Naveen, our advisor, Mr. Nilesh Ganjwala, and the investors who had they had participated in this meet. So thank you very much to all of you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of HLE Glascoat Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.